Good morning, Guyana. Again, I want us to examine some other aspects of Budget 2026. It's important as a country that we benchmark ourselves against world economic indicators and against other countries and regions so that we can see how we are performing in the global scheme of things or within the global economy. And there are some index that I wish to look at. I want to start with the international assessment of the past 5 years and past year. And there's a very important index that is called the Fragility State Index. Now, the Fragility State Index is a global annual ranking that measures how vulnerable a country is to instability, conflict, institutional breakdown, and how the economy can withstand political, economic, and social pressure, not only from within the country, but in dealing with external shocks and crises. For example, if the world is to go through a global financial crisis, how is the economy insulated? How is the economy protected? How is the performance of the economy to deal with such shocks? And I wanted us to discuss this a bit because then you will have an appreciation for the development and growth that has taken place over the last 5 years and how it has positioned our economy in a far better place, driving investors' confidence and driving also this type of structural changes that we're seeing. And this is as a direct result of successive PPP civic budgets that were able to unlock and enable the type of development that enhanced competitiveness, strengthened our economy, built our credibility, and of course created economic growth and development. So one of the first indicator in the Fragile State Index I want to look at is security apparatus. Now, you know we have been investing a lot in security, and one may ask, what are the results? We have already spoken about the lowest crime rate in the regions, in every region of our country, the lowest crime rate within the CELAC region, and a tremendous improvement as a result of continuous investment through successive budgets. And if you look at the Fragility Index, the Fragile States Index, in security apparatus, we move from 12, just about 13, to 6. We were at 13. That is 13 points on the graph. In 2019, today we are at 6. What this indicates is that we have improved as a country since 2019 in managing internal and external security pressures without tipping into instability, or more importantly, our institutions have been strengthened to the extent that it can withstand external shocks. So this decline indicates that we have improved our ability to maintain law, order, and territorial control. And that is as a direct result that we have made in security, made in our defense apparatus, upgrading of the laws, training of our men and women in uniform, that has allowed this massive decline, one of the sharpest decline in terms of security apparatus. Then there's something called factionalized elites. Now the factionalized elites mean that power struggle or and destabilizing forces are easing between 2019 and 2025. So in 2019, we were about 11. In 2025, we are at 5. So this decline again shows an economy and a country that is more equitable. And these are international indicators I'm referring to. Then you have the economy itself. The economy improved from 10 in 2019 to just about 5 in 2025. What does this mean? This means that the economy is more stable, better able to withstand external shock. It is growing, it is creating wealth, it is creating opportunities, it is creating jobs. And again, I'm quoting from the Fragile States Index graph that indicate these various variables. Then look at economic inequality. A lot of people like to talk about the equality of our growth. In economic inequality, we move in a better position. In 2019, we were 9. In 2025, we are just about 4.5. What the decline in economic inequality means is that there is growth, and that growth is fairer and more equitable, benefiting all, irrespective of race, ethnicity, or religion. And that is what the international indicator is saying to us. And then the final indicator I want to look at is human flight and brain drain. In the Fragility States Index, in 2019, we were soaring at 16. Today, we are just about 7. What this means is that the brain drain was enormous in 2019, and there is less brain drain, substantially lower brain drain in 2025. That is less persons migrating, less qualified persons migrating, less skilled workers migrating. It also tells the story that there is decreased capital flight. In 2019, it was high because of the confidence. There was no confidence in the economy. Investors were running away, taking away their money. There was capital flight. Today, that is reversed. There is less capital flight and more persons wanting to be in Guyana and in development. Now let us look at the second index. It's called the Index of Economic Freedom. The Index of Economic Freedom measures how easy it is for people and businesses to produce, trade, invest, and build wealth under a country's laws and institutions. It looks at the economic climate, the business climate, the investment climate, the policy framework, institutional framework. Those are the key indicators. And in all of these indicators, Guyana, again, when compared from 2019 and 2025, we have made significant improvement. For example, in government integrity, our ranking has improved our score has improved from 20 to almost 80. The increase in government integrity indicates that there is better transparency, there is better openness, there is a better procurement system, our judicial effectiveness, our tax burden. Let's look at tax burden. Our tax burden was about 104, just about 50 points in 2019. Today, it's 140 points. The increase in this points means that there is less tax burden. Our taxes are more moderate, broad-based, and predictable. And this is important for investment. So when we give all of these tax incentives, that is how we have seen tremendous improvement in this indicator. We have a more predictable taxation system that is less dependent on human biases. We have a taxation system that is people-oriented, people-driven, that is moderate, that is broad-based, that is predictable, that investors can trust, that is system can trust. And then, of course, we have government spending. The increase in government spending is directly correlated with the efficiency that we have seen in the system, the growth in the system, and the improvement in the system. And this investment in government spending is leading to more efficient and sustainable results with better value for money. That is why we have these improvements and these indicators. So I wanted in this segment to address some of those indicators. And when we look at our economy as a whole, And when most countries across the world are struggling to maintain economic growth above 3% last year, and why? You have the trade tensions, geopolitical uncertainty, fading post-pandemic momentum. Our country again has demonstrated a robust growth-oriented strategy, growing at 19.3% in 2025, when global growth averages at about 3.3%. Last year, average growth rate in advanced economy was 1.7%, and in developing economy was about 4.4%. So, if you look at Latin America and the Caribbean, the region that we're in, the average economic growth in 2025 was 2.4%. The economic growth of Guyana was not only more than two times that. It is the second fastest economy, growing at almost 6 times the global average, and more than 11 times the average in advanced economies, and more than 8 times the average in Latin America and the Caribbean. Why this is so? This is so because of the policies of the government. This is so because we are expanding our traditional sectors. This is so because our economy is more resilient. Our economy is more competitive. Our policy making matrix is working, is delivering results. And how do we know this? We know this because when we go to the economic indicators, you will see that the non-oil GDP increased by 14.3%. And when you look at the areas that the non-oil economy would have improved in last year, you will see that we had expansion in the agricultural sector by 11.5%, bauxite growing by 53.4%, gold 11.6%, mining, auto mining 28.9%, manufacturing 20%, construction 31%, financial services 16.9%, professional and scientific technical services 35.7%. That is because we are investing in the building out of human capacity and capability, the local content legislation, the local content policy that is now delivering results. And when you correlate this with the lending from the banking sector, you would see that the highest lending was in construction, agriculture, services. And that is because the bankers are following the economic trajectory and the diversification of the economy. So you see the broad-based growth, and this speaks to structural resilience. This speaks to structural transformation in our economy. And the results are there for us to see. The development of our traditional sector and non-traditional sector tells you that the resilience of our economy and the future-proofing of our economy is being achieved through the successive budgets and the policy-making framework. If we look at, let me just look at the banking sector in this segment. In the banking sector, you will see that very, very important indicators improving. For example, increase in market securities and international reserves. Over the past 5 years, there has been significant increase in the balance of our market securities, from 94 billion in 2020 to 168 billion, and in today, 2025, an increase of 78.7%. When you look at our international reserves in 2025, it's almost 668 million US dollars above the 2020 levels. When you look at these indicators, it tells you a story that we have a solid and robust financial framework with the fundamentals in place to strengthen our economy, safeguard our economy, and shock-proof our economy, making it more resilient. An increase in government deposit provides greater fiscal space to deliver on our commitment. That is why we are able to Although you have the changes in price for crude oil, we are able to still deliver on all those promises because of this fiscal space that exists. And that came from the policies. Without this fiscal space, we could not have delivered on our commitment. And that is because of sound macroeconomic management. It also speaks to the fact that as a country, we are more than likely able to withstand negative externalities, allowing for greater flexibility and much more control by the Bank of Guyana in implementing the monetary policies. This kind of economic and social privilege is absent in many countries within Latin America and the Caribbean. So we have to be very fortunate and that we have a government in place that is shock-proofing and future-proofing our economy as I speak to you today. If you look at inflation, inflation in 2020 was 0.9%, and then of course COVID came. We know what happened, and today it is one of the lowest inflation rate in the region. You look at the effective tax rate. Again, the story is one of great success. The effective tax rate in 2020 was 14.5%. That is tax per GDP. Today it is 6.4%. 6.4%. If you look at the total public and publicly guaranteed debt to GDP ratio, it came down from 53% in 2020 to 30% in 2025. All of these things, you know, when you look at the effective tax rate, this is the average amount of tax paid on every dollar earner's income. So we are paying less tax on every dollar earned. For a matter of fact, Guyanese are paying almost 8.1 less tax on every dollar earned when compared to 2020. The low level of inflation is tremendously, it is a tremendous success when you look at the global scheme of things. And our debt to GDP ratio is another amazing story in this international environment we're operating in. So my friends, when you look at, you know, our monetary survey also, it points to the fact that there is strong economic growth, and that economic growth is driven by foreign and domestic investment. For a matter of fact, foreign investment peaked at $11.2 billion in 2025, with credit to the private sector growing by 18% between 2024 and 2025. And credit to the private sector would only grow if there is confidence in the economy, if the economy is performing. You look at the increases, again, as I said before, increases in credit. You look at mining 4%, quarrying 30%, manufacturing 29.7%, services 11.4%. At the end of September 2025, the capital adequacy ratio stood at 16.36%, more than twice the prudential benchmark of 8%. This means that the banking system has sufficient capital to absorb shocks. And these are important indicators for us to look at and manage in this international environment we're operating in. Non-performing loan stood at 1.42%. 1.42%. In 2019, non-performing loan was at 11.1%. Non-performing loan are persons who are not able to service their loan. So I wanted to touch on a few of these indicators so that you will have a full understanding as to the performance of the economy, the performance of our policies, and how Budget 2026 and the environment in which, Budget 2026 is crafted. So once again, good morning and thank you for listening, continuing to listen to this series of sharing with you Budget 2026 and how it put the Guyanese people first. Thank you.